Good morning, everyone, and thank you for joining us at this ADGM webinar on economic substance updates. My name is Tim Land, Executive Director, Monitoring and Enforcement at the ADGM Registration Authority. And joining me today are two of my exceptional colleagues, Shamal Mamri, Monitoring Specialist, and Natalie Scott, Senior Legal Counsel at ADGM. We've got a lot of information to cover for you today. As many of you would know, there's been amendments made to the UAE's economic substance regime, and we're going to cover some of the critical updates related to that. We've also got some really important updates for all ADGM firms that are subject to ESR regarding the filing requirements in terms of timing, content, and process for making your ESR filings under the regime. As I said, we've got a lot of content to cover. Normally we would make this interactive, but we're going to have time for Q&A at the end. So please send through your questions, type up your questions and send them through as we go, and we'll pick them up in Q&A at the end, which means that we're going to get straight into this. The slides that we're going to show are going to be published on our economic substance page on adgm.com later this afternoon, so you don't need to take photos of the screen. All you need is your computer, a coffee, sit back. We're going to get straight into this. I'm going to hand over now to Shama to begin our presentation. Over to you, Shama.
Thank you, Tim. Good morning, everyone. Thank you for attending our webinar. I'm Shama, and I will start with the agenda for today. So firstly, we'll give you a bit of a background and feedback on notifications received. Then my colleague Natalie will give you an overview of the key changes following recent amendments to the ESR. Then Tim is going to speak about the impact of these changes on ADGM licensees. After that, I'm going to give you some information on what you are required to file on the online portal. And we will also have a Q&A session towards the end. Next slide, please. So to start with the background, as you all may know, the ESR was introduced as part of the UAE's commitment as a member of the OECD Inclusive Framework and in response to an assessment of the UAE's tax framework by the European Union Code of Conduct Group on Business Taxation. The UAE introduced the economic substance regulations on 30 April 2019. And then on 10 August 2020, amendments were introduced to the regulations by way of Cabinet of Ministers Resolution number 57 of 2020, which repealed and replaced the previous regulations. The first reportable period commenced on 1 January 2019 to 31 December 2019, which means economic substance notifications were due on June 2020. Now, the introduction of the online portal allowed for the notifications to be resubmitted along with the reports in December 2020. However, I will not explain the exact timeframes now, as they will be covered later in the slides. Can we go to the next slide, please? Now, a bit of feedback on the submitted notifications. We were glad to see that a lot of our entities interacted and sent us inquiries that we were more than happy to answer and help with. We received over 1,000 notifications, and almost 90% of the submitted notifications were submitted on time, either on or before 30 June 2020. So this was the positive feedback. Now, regarding points of improvement, we noticed that a lot of our entities had the section for the designated contact person wrong. Like they would not, they would nominate someone who doesn't fall within the list of designated contact person, which includes a general manager, the licensee's general manager, a director, compliance officer, or authorized signatory. Another point we noticed and asked for clarifications on is receiving empty notification forms, but this will hopefully be avoided when the online portal goes live, as it won't allow for late submissions, incomplete submissions. Another point is that some entities would select a relevant activity that is totally different than what they are licensed for. Now, we do know that relevant activities does not necessarily reflect what's on your license, but some entities or licensees selected something that was completely different than the nature of their business. And because of that, we urge you to assess and check your activities and seek professional legal advice if needed. We received a couple of late submissions, but not many, and we hope that won't be the case when the online portal goes live, as late submissions could impose fines of 20,000 dirhams. Another crucial thing I would like to stress on is that failure to respond to requests for clarification from the registration authority would deem your filing to be incomplete, which will result in a 50,000 dirhams fine. So it's important to respond to us and complete your application within the given time frame. So that's it for my presentation for now, and now I will hand over to my colleague Natalie to start her presentation.
Good morning. Thank you very much, Shama and Tim, and welcome everybody to the update on the recent amendments to the economic substance regime. Now, before we dive straight into what has changed, I wanted to spend a couple of moments to talk about the things that are actually the same. We appreciate that many of you would have spent a lot of time getting to know the regime. And so good news for you is that the time spent doing that has not been in vain. So the regime at its core remains the same. It is still very much looking to ensure that those of you who are engaged in the so-called geographically mobile activities have genuine economic substance and presence in the UAE. So the objectives have not changed. The relevant activities that the regime captures also haven't changed. It is still the 9 activities comprising financial services activities of banking, insurance, and the non-financial activities of headquarter business, shipping, holding company business, intellectual property business, and distribution and service center business. The definitions of some of these have changed, and I will go into that in a little bit more detail shortly. But on the whole, the activities that are covered are very much the same. So for those of you who are carrying out these activities, either onshore in the UAE, in a financial free zone or a free zone, and deriving income from those activities, you will still be required to meet the economic substance test. You will, of course, know that you don't have to be actively engaged in any of these activities to fall within the remit of the regime. So simply passively receiving income, say from a financial lease, would still potentially bring you within the ambit of the lease finance business. The final aspect of the regime that is still the same is the economic substance test. So as you know, the general test that captures 3 core elements, namely the income generating activities being undertaken here in the UAE, being directed and managed in the UAE, and having adequate employees, assets, and expenditure incurred in the UAE. So all of these are remaining the same. We also have a couple of variations of the test with reduced economic substance requirements for holding company businesses and increased requirements for high-risk IP businesses. Those are all remaining the same. So with this in mind, let's now take a closer look at what has actually changed. So as Shema has mentioned, the recently amended economic substance regime was introduced on the 10th of August this year. The important thing to note is that these amendments apply retrospectively from the 1st of January last year. So the regime is structured by having Cabinet Resolution number 57, together with Ministerial Decision 100. The Ministerial Decision is the guidance that the Ministry issued on the Cabinet resolution. The guidance now incorporates the Relevant Activities Guide, which was previously a standalone document. In addition to the guidance, there is also an FAQ document on the Ministry's website. I would strongly encourage all of you to have a close look at these documents. As you will see in a moment, they provide a lot of information and are invaluable in understanding what the regime is now. As you can tell from the slide, I'm going to cover off on 4 main aspects of the changes, which will encompass changes to the entities that fall within the scope of the regime, the amendments to relevant activities or the wording of the relevant activities, definitions of some key terms, including relevant income, and the structure of the regime, including the appointment of the Federal Tax Authority. So let's take a closer look at who is now in scope of the regime. Next slide, please. So you will note on the left-hand side that the definition of a licensee has been changed. Licensee now is either a juridical person, in other words, anybody with a separate legal personality, or an unincorporated partnership, provided that they're carrying on the relevant activity in the UAE. Now, you will note from the FAQs that sole proprietors, trusts, and foundations are currently not in scope of the regime. On the right-hand side, importantly, you will see that there have been significant changes made to the exempted licensees under the regime. So there are now 5 new exempted categories. They're set out there for you, but we're talking about investment funds, the fund itself, and any entity through which the fund invests. Importantly, though, this doesn't cover the entity into which the fund ultimately invests. The second exemption are those licensees that are tax residents outside the UAE. Importantly, they need to be subject to corporate tax on all of their income from a relevant activity. Those notifications will be going to the Federal Tax Authority and ultimately the jurisdiction in which persons are claiming to be tax residents of. The third exemption are wholly UAE resident-owned businesses, as long as they're not part of a multinational group and they're only carrying on the activities in the UAE. So the activity must not be engaged in any form outside the country, essentially. The next exemption category are branches of foreign companies, provided that income is subject to tax in that parent company jurisdiction. And once again, these will require notifications to the FTA and ultimately notification to the jurisdiction where the foreign company is located. The last exemption category is essentially any other licensee that the Minister of Finance determines to be exempted under the regulations. Now, you will see that there is a bit of a distinction between entities or licensees that are not in scope and those that are exempted. They have different implications because not being in scope essentially means that the regime doesn't apply to you. So you do not need to file the economic substance notification or to meet the economic substance test. If, on the other hand, you are an exempted licensee, you need to do actually need to make the claim for the exemption and provide evidence to substantiate the claim. Tim and Shama will show you more on that later. Once you have made the claim, you are still going to be required to submit the economic substance notification, but you will not have to file the report or to meet the economic substance tests. So as you can see, they're quite different in terms of what they entail. Let's now take a look at how branches are being treated under the current economic substance regime. So you will see that there are essentially 3 separate scenarios that are being contemplated here. The first on the left is where you're dealing with a UAE branch of a UAE company. These are, in a nutshell, regarded as an extension of the parent. So they're not treated as having separate legal personality. And for this reason, the parent or head office that's registered in the UAE is going to be required to file a single notification and a single economic substance report if required. On the other hand, in the middle, you will see where we're dealing with a UAE branch of a foreign company. These will be required to comply with the economic substance regulations as if they had a separate legal personality from a foreign parent, unless it can be demonstrated that the income of this branch is subject to tax in that foreign parent jurisdiction. So subject to tax simply means that where the income of that branch is taken into account for the purpose of calculating the taxable income of the parent in that foreign parent jurisdiction. Now, you will note that the FAQs on the website specifically say that for the purposes of this test, it is done so irrespective whether or not the income can benefit from any exemption or any form of corporate tax relief in foreign jurisdiction. So once again, back to my earlier suggestion to have a look at the FAQs for future reference. The final example on branches is in respect of a foreign branch of a UAE company that is carrying on a relevant activity outside the UAE. These branches are not required to report or not to consolidate the activities of the branch for the purposes of the economic substance regime, provided that the foreign branch is subject to tax in the foreign jurisdiction. So with this in mind, as I've mentioned earlier, a couple of the relevant activities under the regime have changed a little bit. So let's now tune our minds to the first one of those, which is the distribution business. You will note on the left-hand side that the definition of a distribution business has been simplified and a little bit broadened. So in this instance, a licensee will be deemed to be engaged in a distribution business where they purchase raw materials or products from a foreign connected person. That's the important aspect. And then resell or distribute these to anyone, either the UAE or elsewhere. So working through an example here, you will see that a GM entity, Widgets Limited, I'm afraid, we're not very creative, buys widgets from a group entity in the UK and then on-sells them to both an entity in Kuwait as well as to some very happy customers in the UAE. The purchase of the widgets from a foreign group company brings the AGGM entity within the regulated activity of distribution business. So the new formulation of this relevant activity means that as long as the purchase is made from a foreign group entity, the resale can happen anywhere. This was previously required to be done outside the state. Now it captures both outside and inside the state. You will note too that as part of the amendments, there have been some new definitions or better definitions for certain terms under the regime, such as a foreign connected person, which is essentially a connected person that is not a tax resident in the UAE, a connected person, that is an entity that is a part of the same group as a licensee or an exempted licensee, and the definition of a group, which is two or more entities that are related either through ownership or control to such an extent that they are required to prepare consolidated financial statements. So having had a look at the distribution business, let's now turn to the second half of this relevant activity, which is the service center business. So similarly, the definition of a service center business has been simplified, and now a licensee is deemed to be conducting a service center business if they are providing services to a foreign connected person. Now, this definition is a little bit clearer than what was there previously, because there was previously a requirement that the services be conducted in connection with the business outside the state. Now it's any services. And as you know, services can be consulting, administrative, and the like. So working through the two examples on the right there, the first example is pretty straightforward. So you will see the blue entity, which is ABC HR, is actually in the business of providing HR services, and it is providing support, HR support, to its entity ABC LLC. As a result, they are deemed to be conducting service centre business. In the second example, the situation is a little bit different because the ADGM entity is actually in the business of providing audit services. So you will see it's ABC Audit Limited. And what it is currently doing is it is providing, by a temporary arrangement, IT services and support to its group entity in Kuwait. Now, because it is providing these services temporarily and it is not in the business of providing IT services, this entity will not be regarded as providing service, as engaged in service centre business. Had it been providing audit services, it would have been, as opposed to temporarily providing IT services. Let's now turn to the next relevant activity, which is high-risk IP business, please. So by way of a very brief refresher, when we talk about IP business, what we're actually referring to is more than just a business that owns some form of IP asset. Fundamentally, most businesses have some form of IP asset ownership. What makes somebody engaged in an IP business for the purpose of economic substance is that they're actually earning separately identifiable income from that IP asset. If not, the IP asset is simply auxiliary to their main business. If a licensee is in fact engaging in IP business, they need to ask themselves whether or not it's actually a high-risk IP business. The definition of what it means to be a high-risk IP business has again been simplified. As you will see on the left-hand side, you've now got 3 requirements that need to be met to be considered a high-risk IP licensee, namely that the licensee didn't create the IP asset, that they have acquired it from a connected person, and that they have either licensed or sold it, or that they're earning income from that IP asset. So in our example on the right-hand side there, let's say that the ADGM entity, Pharma SPV, had acquired a patent from its UK group entity. It then licensed that patent to Pharma LLC in Egypt and is earning revenue from that licensing arrangement. Since the ADGM entity didn't actually create the patent itself, it would fall within the definition of being a high-risk IP licensee. Now, the consequences of being regarded as a high-risk IP licensee are threefold. First, as you may recall, there is a rebuttable presumption that the high-risk IP licensee fails the economic substance test. That presumption can be refuted, and to do that, the licensee will need to provide evidence that they hold a high degree of control over development, enhancement, maintenance, protection, and exploitation of the IP asset. Following the recent changes to the regime, this information now needs to be provided to the UAE Federal Tax Authority under Article 8.6 of the resolution. The second consequence of being regarded as a high-risk IP is that there are reporting requirements by the Federal Tax Authority to the competent authority, which of course is the Ministry of Finance under the regime. And thirdly, the Ministry of Finance will be required to exchange the information on the high-risk IP licensee with the foreign competent authority of whichever country or territory the parent company, the ultimate parent company, and the ultimate beneficial owner of the licensee resides in. So these are quite significant consequences, as you can see. Let's now turn to the final relevant activity that I wanted to touch on today, which is a holding company business. Once again, the definition has been simplified a little bit, and being a holding company business means that its sole function is the acquisition and holding of shares or equitable interests in other companies, and that the company will only earn dividends and capital gains from these equitable interests. Terms like equity interests are defined broadly to include shares in the company as well as interests in unincorporated partnerships and any other instruments, and dividends are also very broadly defined. Now, you will of course remember that a licensee whose activities are limited to a holding company business will only be required to meet the reduced economic substance requirements. So the examples on the right-hand side are relatively self-explanatory. So the one on the left side, the first example is a self-explanatory example of a holding company business. And then the second example, you can see that holding a real estate building would take the ABC ADGM entity outside of the realm of holding company business. Now let's take a look at some of the definitional changes and clarifications that the recent amendments have introduced. On the next slide, please. So as I've mentioned earlier, terms like group and connected person have now been clarified. In addition, the definition of relevant income has been clarified by defining what is meant by gross income. And specifically, the clarification says that it does not mean taxable or accounting income or profit. So the definition is much, much broader than that. And let's now tune to the administration of the regime and the appointment of the UAE Federal Tax Authority. So the UAE FTA has been appointed as a national assessing authority. It is primarily responsible for assessing and enforcing compliance with the economic substance regime. Its functions include assessing the reports, making a determination as to whether a licensee has met the economic substance requirements, issuing financial penalties, responding to appeals, and then sharing the information with the UAE Ministry of Finance, which is the competent authority under the regime. Importantly, though, the role of the regulatory authorities remains central to the administration of the economic substance regime across the country. As you can see in the diagram on the next slide, in terms of the flow of information between licensees, regulatory authorities, the Federal Tax Authority, and the Ministry of Finance in its capacity as a competent authority. So each of these have got important obligations under the regime. In ADGM, as you know, the registration authority administers the economic substance regime both across financial and non-financial relevant activities. And to take you through some additional amendments, I will now hand over to my colleague Tim, who will discuss the changes to the filing requirements and processes and any other impacts of these changes that you need to be aware of. Over to you, Tim.
Thanks very much, Natalie. So Natalie has covered some of the key changes based on the amendments to the regime. I'm going to drill down now a little bit more and Shama to follow me on ESR filings and some of the changes that have taken place there that licensees and exempt licensees need to be aware of. First one, of course, and as many of you may have heard, all filings, all ESR filings, and by filing, when I say filing, I'm going to be referring generically to both notifications and reports. So filings will, going forward, need to be submitted via a portal that's going to be made available by the Ministry of Finance, the online portal. And the second key point to be aware of, if you're not already aware of it, is that all the firms that have already filed notifications, including firms who, well, most firms who filed by 30 June, will need to resubmit those filings. There's a number of reasons for that, but including the fact that there's been some changes to the definitions, as Natalie has taken you through. So it's one thing that's really important is for firms who thought that they may not be subject to the regime before, you may now be, and therefore you need to file. So all firms who filed before will need to file again once that portal goes live. And also, as Natalie has mentioned, that branches of a UAE entity, ADGM branches of for UAE entity, do not need to individually file. The UAE head office would file on behalf of the group, including any ADGM branches. So that's one filing by the head office within that group. So if we go to the next slide. Okay, timing-wise, the guidance, the Ministry Decision 100 that has come out at Article 4.4 has clarified that all notifications must be filed within 6 months of a company or licensee's financial year end or accounting reference date, as we refer to it in our company's regulations. So that's within 6 months for the notification of the financial year end. For the economic substance report, it's 12 months, and that's set out at Article 8.4 of the Economic Substance Regulations themselves, the Cabinet Resolution 57. Now, I'm going to, well, in terms of the portal, the Ministry of Finance's portal, that's expected to go live in the first week of December. And I'm going to, in the next few slides, I'm going to take you through some examples of the timing requirements for when the portal does go live that you'll need to be aware of. So the first example is for firms who already filed by 30 June, the notification. In most cases, because you've got a calendar year, financial year, running from 1st of January 2019 to 31 December 2019, you would have filed on or by the 30th of June. And you need to, as we've said, you need to file again, and you'll need to file via the Ministry of Finance's online portal once that goes live. Now, the portal is expected to go live in the first week of December. And once that portal goes live, firms will have until the 31st of December to refile the notification. It's really critical that all firms that are required to do so make that filing by the 31st of December via the portal, because as per the penalties, which we'll come to in a moment to refresh everyone on, a late notification is now subject to a fine of 20,000 dirhams. Now, for firms in this situation as well, as in having a 31 December 2019 financial year end, you would also need to file your economic substance report by the 31st of December, because as per Article 8.4 of the economic substance regime, you have 12 months. You have to file your economic substance report within 12 months of your financial year end. So by 31 December, once that portal goes live, by 31st of December, you need to have filed your notification and your economic substance report, unless you're exempt, then it's just a notification. The system will allow you to file your notification first and then subsequently file the report immediately after. So we'll go to the next example. Okay, so what about firms who have a different financial year end, such as a financial year end ending on 31st of March 2020, where according to the 6-month requirement for your notification, you would have had to have filed that by the 30th of September ordinarily. Now, because you need to wait until the portal goes live, the requirement is that once that portal goes live, again, you need to file that notification by the 31st of December. So that is, again, for firms who had a notification that was already technically due, but you could not file it yet because the portal's not live yet. Once the portal goes live in early December, which is when it's expected, you will have until, well, the requirement is that you file by 31st of December, again, in order to avoid a late filing penalty of 20,000 dirhams for not following your notification on time. Also, just touching on the fact that given that the economic substance report, and if you're not exempt, the economic substance report is due within 12 months of your financial year end. Therefore, as you can see on the slide there, you'll have until 31st of March 2021 to file the economic substance report. But the notification will be due by 31st of December once that portal goes live. And the third example, if we could go to that, thank you very much, is for firms whose economic substance filing, economic substance report, I should say, fell due prior to the portal going live. So what's an example of a firm whose economic substance report is already due? That is, for example, if you had a firm set up, say around March 2019, for example, or March or April 2019, and it chose to have a financial year end date of the 31st of October 2019, that entity's first financial year is a short financial year. And given that you need to file your economic substance report within 12 months of your financial year end date, that means your economic substance report is due on the 31st of October 2020. But because you can't file until the portal goes live, once that portal goes live, the requirement will be for you to file your economic substance report by the 31st of December as well. So I guess the critical thing to be aware of here is that failure to, unlike the notification, a failure to file the economic substance report on time is subject to a 50,000 dirham fine, not 20,000, and you'll possibly be deemed to have failed to meet the substance test, which could lead to a further 50,000 dirham fine. So it's really critical that whatever situation your firm is in, whether you're a licensee or an exempt licensee, you need to be aware of when the portal goes live, that you need to either get your notification filed by the 31st of December and potentially your economic substance report as well by the 31st of December to avoid serious penalties for failure to comply with these filing requirements. The next slide is just to recap on some changes to the amounts under the amendments to the regime. The broad offences are still the same: failure to file, failure to file accurately or completely, and failure to demonstrate economic substance. In the UAE, these remain the same, but the amounts have changed. So failure to file the notification is 20,000. Failure to file a economic substance report is a penalty of 50,000 dirhams, and the deemed failure to have met the substance test. Failure to provide accurate or complete information is 50,000, and so on and so forth. You can see that there. And as I said in my introduction, we're going to publish these slides after this presentation. One thing I would just like to highlight again and stress is that based on our experience with the notifications that we received in June, where there were notifications that we needed further clarification on, and we went back to firms and asked questions or asked for more information, we encountered issues with firms not coming back to us promptly. If you fail to respond to us when we send you a question saying, can you please explain this, or can you please provide more supporting information, and you don't do that within a strict period of time, then you will be committing the offence of failure to provide accurate or complete information, regardless of whether you filed on time. If you don't respond to our inquiries, you will have failed to provide accurate or complete information, and that will lead to a fine of 50,000 dirhams. So it's really important not just to get your notifications and reports in on time, but do so completely, or if we ask you a question, that you respond to us quickly. Okay, so now I'm going to hand over next to my colleague Shama, who's going to talk more about the actual contents of the notifications and the reports. So over to you, Shama.
Thank you, Tim. So here I will give you some information on what to file and what to expect from the online portal. Of course, these are not all of the requirements. There are more, and we will share them with you once the actual templates are published, which will be hopefully soon. I will start with the notification forms first. So the online portal would require you some information such as your details, your name, license number, address, legal form, VAT tax registration. And as supporting documents, you will need to provide your trade license, your VAT registration or VAT invoice. The portal will also ask you to choose your relevant activities and whether you earn income from them or if the income is subject to tax outside of the UAE. For IP businesses, you need to indicate whether you are a high-risk IP and provide us with clarification whenever we send you inquiries on that. You will also need to provide ownership information. And as a supporting document, you will need to provide the ultimate beneficial ownership information. Next slide, please. Now, when you come to the exemption section, you will need to provide some documents to demonstrate that you are exempt. For example, if your entity is an investment fund, you need to provide statutory documents and information memorandum, your license if you're established in a jurisdiction outside of the UAE. Another exemption category is tax residency in a jurisdiction other than the UAE. You will need to provide a copy of an assessment to corporate income tax, the corporate income tax demand, evidence of payment of corporate income tax demand. If your entity is wholly owned by UAE residents with domestic transactions only, you will be required to provide your shareholder register, the structure chart. If your company is a UAE branch of a foreign entity in which the relevant income is subject to tax outside of the UAE, you will need to provide a copy of tax return and copy of any assessment of corporate income tax. Next slide, please. Now moving on to the report filing. Here, the portal will ask you for financial details. Of course, the general details here, like the previous slide, some financial information, such as whether you have your audited financials available, the currency used, the total revenue for the reportable period. And you will also need to provide your financial statement or management account. The report filing will also require you to submit the ownership information of your company and provide the UBO information as a supporting document. Next slide, please. These are more information on the financial requirements that the portal would ask you to provide, such as the relevant income, the operating expenditure, the core income generating activities performed in the UAE relating to your relevant activity, and expenditure incurred on outsourcing providers in the UAE. And as a supporting document, you will need to provide your financial statements. Next slide, please. Now, depending on your relevant activity, more information will be required from you. For example, if you conduct investment fund management business, you will need to state the total market value of assets under management. If you conduct banking business, you need to state the total value of UAE deposits held by you. If you conduct IP business, you will need to state the type of intellectual property assets held by you. And as supporting documents, you need to provide your financial statements. Next slide, please. So now what do you need to do next? First, you have to check your business activities and assess whether you fall under the definition of relevant activity Also check if you fall within the exemption categories. And if you are not sure, as much as we would love to help, please seek professional legal advice, because we do not provide legal advice. So we can't tell you if your business activities fall under the definition of relevant activities. We would like to advise you to start preparing your documents from now. Start preparing your notifications and reports unless you are exempt. Also, keep an eye on our website and on the Ministry of Finance's website for the online portal go live date and any guidance and circulars we might publish soon. And that's it for our presentation for today. And now we will start our Q&A session with our speakers. I think Tim is cutting off.
Hi, apologies. We're having a little bit of a sound issue with Tim at the moment. So while Tim is in the process of resolving that, Shama, thank you very much for going through the information that is likely to be included in the templates. As Shama has mentioned, we will be able to share more information with you once the templates have been uploaded onto the ministry's website. And in the meantime, share this presentation with you, which will be available on the ADGM's Economic Substance webpage. Now we've got a little bit of time to engage in some of the Q&A. So please send us your questions if you have anything. Or have we received anything so far? Or let me have a look.
Yes, we did.
Okay. So we've got a number of questions that are currently coming in. I encourage all of you to send some more. The first question that I can see now is a question in relation to a UAE branch of a foreign company that has relevant income that is consolidated into the financials of a foreign head office and included within taxable income of the foreign head office. And so the question is whether the branch is exempt from the economic substance requirements in the UAE, even if the foreign head office is established in the jurisdiction that applies a corporation tax rate of 0. In other words, there is no tax rate payable. I'm happy to take this one. Look, the short answer is, as Shama has mentioned, we are not obviously in the position to give you legal advice on the interpretation of what will and will not fall within the exemption. I can direct you to the FAQ on the ministry's website, which says that for a UAE branch of a foreign parent, they will not need to comply with the regulations if they can demonstrate that the income of the branch has in fact been taken into account of the parent. The FAQs go further and say that when we're talking about the income being taken into account for corporate tax, that is irrespective of whether that benefits from an exemption or other form of corporate tax relief, such as, for example, a double taxation treaty. So whilst it doesn't specifically address the question of the corporate tax rate being 0, I think that is potentially one interpretation. I do suggest that it's perhaps something that further clarity can be sought from the ministry in due course to better understand this. Tim, do we have any other questions that you can see?
Yes, can you hear me okay now?
Yes.
Okay, great. So we do have a number of questions coming through. I'm going to just quickly answer an easy one, which is where will this presentation be made available? It will be on the economic substance page within the ADGM website. So that's if you go to adgm.com Know Your Obligations, Economic Substance. We'll be publishing the presentation there this afternoon. The next question we've got is, if a UAE branch of a foreign company has relevant income consolidated into the financials of the foreign head office and included within the taxable income of that foreign head office, is the branch exempt from ESR requirements in the UAE, even if that foreign head office is subject to a zero rate of tax? Natalie, do you have any thoughts on that?
Sorry, Tim, if you don't mind, would you repeat the question, please? Because I can't see it on my screen.
Sure. So it's a long question, but I'll try and explain it briefly. It's if you've got a UAE branch that is a branch of a foreign company, and its financials are consolidated into that foreign head office, including.
I have just answered this one. This is the one that I have just answered. So I think your sound might not have been on at the time. So this one has been addressed.
Excellent. When will the template ESR become available? And do we have any idea what the content of it will contain? I think that question might have come through at the beginning. So I'll take that one. Template is expected to be published again by the Ministry of Finance on its website any day now. And that can be found at mof.gov.ae. And once you download the template there, you can see all the questions that you need to fill in, which Shama has given you a flavour of based on our presentation, which you'll also be able to look at as a guide until the templates are public. The next question coming through is, what will be considered as sufficient evidence that the relevant income of a branch is within the scope of taxation in jurisdiction of the foreign head office? So that's what will be considered sufficient evidence that the relevant income of a branch is within the scope of taxation in the jurisdiction of a foreign head office. Kind of a difficult one for us as the regulatory authority to answer. I think if you take a look at all the supporting documents that will be required to be provided with the notification template, that will give you a good guide in terms of what will be required to demonstrate that in terms of sufficient evidence. When those templates go live, and as Shama has provided a flavour of in her slides, when the templates go live, they will provide not only the questions but the required supporting documents for each field to evidence that particular question or field. But Shama or Natalie, do you have any thing you want to add to that point?
Not really, Tim. I think you covered it.
Okay.
There's another question, if you don't mind me reading it.
Go for it.
Hamad Helmi is asking if we didn't file an ESR before because we are not falling under the reporting entities, do we need to file a notification now? Well, if you checked and assessed and you came to the conclusion that the ESR does not apply to you, then you don't need to file. But please check again and seek legal advice if required to make sure that you don't file under the regulations.
Absolutely.
Yeah.
Okay. Vijendra has asked a question about the exempt categories and whether or not you need to take an approval from the authority to assess that position. So as Natalie explained earlier on in the presentation, that even if you believe that you fall within the exemption, you still need to file the economic substance notification in order to demonstrate that you qualify for that exempt status. And the economic substance notification form will require you to say which category of exemption you think applies to you, and provide supporting documents and evidence, which Shama went through, to demonstrate that you actually do qualify for that exemption. So when we publish our slides after this presentation, one of the slides that Shama covered was specifically about the types of evidence that you will need to provide to demonstrate that you qualify for the exemption. Provided you do that and you provide it and you've demonstrated that through your notification and the supporting documents that you provide with the notification, then exempt licensees do not ordinarily need to file, they don't need to go on and file the economic substance report subsequently. Question from Naveen. If an ADGM company was formed in July 2019 with an October 2019 financial year end, will ESR notification apply? So under the ADGM's companies regulations, when it comes to a short first financial year, the minimum period must be at least 6 months. So because July 2019 to October 2019 would be less than 6 months, that's too short a first financial period. So you would have a long first period, and your company's first financial year would run from July 2019 to October 2020, and then the notification would be due 6 months after that, and the first economic substance report would be due 12 months after that. So you wouldn't need to file by 31 December. So thanks, Naveen, for that question. Got a question from Kath. Will the online portal submission will the submission require a signature from a representative of the company? Good question. Shama, do you know the answer to that?
Well, if the representative falls within, I think, the list of the designated contact persons,
yeah, but in terms of the signature, though, because I think because it's all digital, it's an online filing.
Yeah.
You will need to log in. You'll need to get a login to the Ministry of Finance's portal. But we'll need to find out. I'm not sure.
I think it's an electronic signature but we are going to check and let you know offline.
Yeah, absolutely.
I think we don't have more questions, or
yeah, we've not had any more questions, and we've lost Natalie, unfortunately. But if you have any more questions, please send them to our dedicated mailbox for economic substance. That's economicsubstance@adgm.com, where Shama and I can pick those up and get back to you. I'd like to, first of all, thank the production team, Gary and the crew behind the scenes for helping us with this session today. My excellent speakers, co-speakers, Shama and Natalie. And I'd like to thank everyone else for joining us today. I'd like to leave you with two key thoughts, which is one, please go back and reassess whether or not the economic substance regime applies to you based on the changes to the definitions, based on the changes to the exempt categories. And then secondly, based on the templates, once they're published again on the Ministry of Finance's website, please start preparing your filings, because the portal is due to go live in the first week of December. You won't have much time to file as soon as the portal goes live. So please start preparing now, and we will be sure to get more updates out to you as and when they become available. But thanks again for joining. Shama, did you have any final thoughts you wanted to mention?
Yeah, if we weren't able to answer your question, please email us at economicsubstance@adgm.com, because I can see that we have some questions here, but we're out of time. And yeah, thank you for attending our webinar.
Thanks, Shama. Thanks, everybody.
Thank you.